All right, this is one that pisses everybody off. No trading this week. I want you to stop trading for a couple of days. Money, when it's on the table, good or bad, clouds your judgment. Especially if you're losing, right? If you're in a negative open float, or if your trades are down, or you're getting stopped out, you're not going to think with a clear head. And if you make too much money, the same thing applies. You're going to be so jacked up that you're not going to listen to anything. Just turn the platform off for a few days. The market's going to be there when this class is over, I promise. And just hang on, absorb the knowledge with an open mind, and then be ready to trade at the end of this class going into next Monday. Okay? What I wanted to mention to you is that we're going to do a little something different this class that we haven't done before. I'm going to have Carr, Kim, and Granny on the last night come in and give you the market maker biases going into next week. What that's going to do is after you have the information, you'll have a first-hand idea of how to apply it for next week's market. Okay? Some of the points I mentioned, I'm asking this as a favor. Put aside everything you think you know to be true about the markets. Open your mind to the possibility there is, in fact, something going on here and that we're privy to it. Allow yourself the opportunity to have success. And something I say in my regular presentation, don't try to mix systems into this. Don't say, oh, Steve, this is great, but I like the slingshot, or I like the rainbow stochastics to add to the bottom of this. It'll really make it great. That stuff is unnecessary. Don't do any of that stuff. Just give me 4 days, sip the Kool-Aid. I promise you, you'll be happy. All right, this housekeeping slide, usually we don't need to worry about cell phones on vibrate. I'm going to try to break about 5 to 10 minutes every hour. Quick bathroom break, grab a Diet Coke, etc. I don't put out a book or a textbook or notes. So I'm going to insist that you write stuff down or go back through the recordings and take advantage of that and take your notes then. Just enjoy the class. Kim mentioned this, but it's important. If you're a retake, don't ask questions about sections that we're not covering yet. Gloria, if you're here, don't ask me about the ADR on day one. Save that for when it's supposed to be presented. If you have questions and you just can't stand it, email them to me or save them for the very end of class during the presentation, all right? Let's not try to interrupt the flow of what's going on. All right, I want you to be courteous to your other students in the forum, in the classroom, and in the live classroom. We all paid to be here. Everybody learns at a different pace. If I get going too fast, don't be ashamed to say, hey, Steve, man, look, you're jacked up on Diet Coke. I can't keep up. Slow it down a little bit. I'll wait up for you guys. All right, I'm here for all of you. That's not some sales or bullshit. The sales part's over. I'm here for you guys. I answer emails. If you're struggling and you're embarrassed to ask me, don't be. You paid to be here. I'm here to get everybody going in the right direction and on the right track. All right, we're going to do some homework. Possibly going to end up posting it in a forum, but here's the email address the homework goes to. steve@mmmforex.com. The guys that are having the most success, girls too, have done all the homework. Some still do homework on the weekends or on a slow night. I know you're saying, shit, I didn't pay this guy all this money to sit here and do homework. I promise you that homework is the key to success in what I'm talking about. If you can't see it in hindsight, you will never see it in real time in foresight. So the idea with the homework is, once I illustrate to you how the market makers work the market, is to go back and to make sure that you can see the stuff developing, see the levels, and see the things that I point out to you in the past. And once you can rapidly identify those things in the previous charts or in history, you should start to recognize their appearance in real time. Everyone should have gotten a glossary. If not, it is in the forum. Keep it handy for the next couple of days. I might say some things that don't sound normal. That's normal for me. The terminologies are on there. The best thing to do is tonight after class, if you're a little lost, just read over that a couple of times and get familiar with some of the things I say. That's all. All right, that's what it looks like. You should have it. Okay, some people are saying they can't see the slides. We're on the glossary page. If you can hear me but not see slides moving, everything's working on my end. I'm positive. So log off and log back on, okay? All right, let's get started. We're all here to learn how to beat the market maker and trade in line with him. All right, so to beat this guy or these group of guys, you got to understand their objectives and what they do. Their first objective is to induce traders to take a position. How do they do that? They circular trade, which means they trade between them. They trade from bank to bank, back and forth. They produce wide range swings. The swings create some type of activity in the market, even though there's really no volume behind it. Your account is of no use to him. You making a deposit of FXDD is of no use to the dealer until you click the mouse, until you take a position. So his job is to induce you to click the mouse by showing you something on the chart that gets you to take action. Usually he sets up some type of textbook technical that you've read about, or a breakout system, some type of behavior to get you to click the mouse. Their second objective is to create panic and fear to get you to think irrationally. And when I talk about the illustration, is they spike the market quickly and pull away from those zones, which validates the pending orders or gets people going in the wrong way. That quick move or spike or inexplicable price behavior out of nowhere, they spike the market on a Friday afternoon right before the close. That creates a panic in you. And if you're in a position when they snatch the market away from you, that creates a panic, gets you to lift your stop and think irrationally. That irrational behavior ensures that they will margin you out or eventually get you into trouble. And finally, what the business is about from the beginning is the money. So they got to hit the stops and clear the board. And if you lifted your stop, they're going to drag the market in such a way that it forces the majority of the traders into margin issues. Because the bottom line and the most important objective is to pocket your money so they can get their Christmas bonuses. Okay? All right, am I going at a good pace? Okay. In order to beat this guy, you got to know what they're capable of doing. These slides were given to me out of a textbook in the back office in Dubai called the MetaTrader 4 Manager's User Guide. Okay, what? You're saying you didn't know they had a book? Did you think that $4 trillion is floating around without a book or some type of idea on how to beat the traders? Somebody wrote a book on how to take your hard-earned money away. The business is not random. Okay? Market makers can issue you a requote at will. You see the three buttons in the center: return, send, confirm, reject. They simply hit the reject button and you are forced to reissue your order, which in turn, the market's moving, you get requoted at the new available price. Keeps you from getting a good fill, getting a good entry. Market makers can trigger all the stops in a range. Left arrow says stop out, check the box. The right arrow, unlimited, across the board. We got X number of contracts in open float. At this price point, we want to hit the stops. They simply add that, hit OK. Notice it's in different languages. They hit it. Done. They got what they need. Market makers can toy with the spreads. You know those robots that work so wonderful in demo that are garbage? This is why. In demo, you get an aggregate of about 3 feeds, 3 price feeds. The aggregate of the 3 feeds is going to be much smoother than what you're really up against on a real account. In demo, since it's not real, they could care less about manipulating the spread, widening the spread to pick up the stops. They don't care. So what happens is you spend $97, which by the way is the refund price point for ClickBank. You spend $97 and buy a robot. Anything over $97, they got to give you a refund. Anything under, they do not. You own this robot. You put it on an account in demo. It makes $10 million in 25 minutes. You're jacked. You put your hard-earned money in the account. And then guess what? They take that little slider where the arrow is and open the spread on you. You'll pick up your buy side of the order, and the sell side or the opposite closing position side will never hit. There's a lawsuit right now, I believe it's with FXCM, that states this exactly. I think Abo sent it to me, and if I remember, someone reminds me with an email, I'll post it in the forum. Since it's a private forum, I could say the name, I guess. Can I, Kim? I don't know. The dealer is being sued for having these backside plugins and using these against the traders. Now, I want to say that not all dealers use this. There are some honest dealers out there. Usually the ones that are backed up by banks, or I know Kim and Scott represent good, clean dealers. But what I'm telling you is that this kind of crap goes on. That's why the NFA is trying to regulate this business and clean it up a little bit. Okay, did you ever open up 2 different platforms and notice that maybe one high of the day is 23.55 and another one is 23.57? Do you understand that the dealer can hold a price point with this plugin right here? Here's how. He can set the high, low, and close on a bar based on where the orders are. So if the dealer sees stops at 23.59, or if he sees a bunch of orders at 23.60, he simply types in the high of the bar to go to 23.59. Let's say there's stops at 55. The dealer goes, man, we got stops at 55. Let's hit 59 and clean the board. Remember I told you his third objective is to hit the stops and clean the board? This is how he's capable of doing that. Okay, let's say there's pending orders at 23.50 or 23.48 on the low side. He doesn't want to activate those orders because he might end up retracing and going back down. He will make the low 23.52 and leave the pending sitting there and not absorb those orders because he doesn't want the negative drawdown. Okay? These tools give the dealer an edge. And understanding that these are out there switches the edge back in your favor. They know who's in margin trouble. Ever do something stupid and lift your stop and get yourself flashing red and black back and forth because you're on the edge of margin? He knows this. He has the whole list of who's in call-out trouble. It's on his desktop. There's a trade designed called the straightaway, which I'll discuss here this week, to finish these guys that are on the fence and call them out and take the balance of their account. It's up to you to know the call-out level of your dealer. You guys that are overseas, certain dealers have a 0% margin call. That means they could take every penny from your account. Some have a 25, some have a 50. They could even take the front side margin that you're using to hold your positions open. You need to understand this. Understand that when the traders are in trouble and these margin call levels are on the fence,